Imagine asking an AI tool, "What is the best stock to buy today?" Within seconds, it gives you a confident answer, a detailed explanation, and even a price prediction. It sounds intelligent, it looks convincing, but what happens if the financial numbers are outdated, the sources do not exist, or the AI has simply invented part of the answer? That is where AI investing becomes dangerous. AI can be an extremely useful investing research assistant, but it should never become your financial decision maker. In this video, we will show you 5 practical ways to use AI for investment research, the mistakes you must avoid, and a simple safety workflow you can use before investing any real money. This video is for education only and is not financial advice. Welcome to the official AI Hustle Club, where we make AI simple, practical, and useful for everyday people. What AI can and cannot do. Let us begin with one important distinction. AI is good at organizing information, explaining financial concepts, summarizing documents, comparing businesses, generating research questions, helping you create repeatable checklists. But AI may struggle with providing perfectly current information, understanding your complete financial situation, predicting unpredictable markets, distinguishing reliable information from misleading information, producing accurate calculations every single time, recognizing when its own answer is wrong. Generative AI can sometimes produce incorrect or fabricated information while presenting it confidently. OpenAI advises users to verify important information, and V.E.R.I.F.Y has highlighted risks, including hallucinations, bias, privacy issues, and insufficient domain knowledge. So here is the golden rule. Use AI to improve your research process, not to replace your judgment. Do not ask, "Which stock will double next year?" Ask, "Help me understand this company, identify the risks, and create a list of facts I should independently verify." That small change turns AI from a prediction machine into a research assistant. Use case 1. Understanding a business. Before studying stock prices, you should understand how the company makes money. AI can help explain a business in beginner-friendly language. You could use this prompt. Explain how this company makes money as though I'm a beginner. Identify its main products, customers, revenue sources, competitors, and biggest business risks. Do not give me an investment recommendation. Clearly, label anything that requires current verification. This can give you a useful starting point. But do not stop with the AI response. Verify the information using primary sources, such as the company's latest annual report, quarterly earnings reports, investor presentations, official regulatory filings, the company's investor relations website. AI should help you understand those documents, not replace them. Use case 2. Summarizing an annual report. Annual reports can contain hundreds of pages. Most beginners do not know where to start. You can provide an official report to an AI tool and ask it to examine specific areas. For example, using only the attached annual report, summarize the company's revenue growth, profit trend, debt, cash flow, major peer risks, and management priorities. For every conclusion, provide the relevant page number. If the document does not contain the answer, say "not found." The words using only the attached report are important. They reduce the risk of the AI mixing the report with unrelated information from elsewhere. The request for page numbers is also important because it allows you to inspect the original evidence. Even then, manually check the most important figures. A small error in revenue, debt, earnings per share, or cash flow can completely change your interpretation. Use case 3. Comparing companies. AI can also help you organize a comparison between two businesses. Suppose you are researching two companies in the same industry. Instead of asking which one you should buy, ask, create a neutral research framework for comparing company A and company B. Include revenue growth, operating margins, free cash flow, debt, valuation, competitive advantages, customer concentration, and major risks. Do not choose a winner. Tell me what data I need and where I should verify it. This produces a research template rather than a potentially unreliable verdict. You can then collect verified numbers from official filings and insert them into the comparison. AI is particularly helpful for asking follow-up questions such as, why are the profit margins different? Is one company carrying more debt? Which business is more dependent on a small number of customers? What could disrupt this industry? Which assumptions are most important to the investment thesis? Notice that none of these questions asks AI to predict the next stock market winner. They ask AI to help you think more clearly. Use case 4. Finding risks and challenging your opinion. One of the biggest investing dangers is confirmation bias. That means we search for information supporting what we already want to believe. Perhaps you love a company's products. You may then ignore declining profits, rising debt, or stronger competition. AI can act as a devil's advocate. Try this. I'm considering investing in this company. Challenge my opinion. Identify the strongest arguments against the investment, the assumptions that could be wrong, and the warning signs I should monitor. Do not invent facts or prices. You can also ask, what evidence would prove that my investment thesis is wrong? This is one of the most responsible ways to use AI. You're not asking it to confirm that you are right. You are asking it to reveal what you may have missed. Use case 5. Creating an investment checklist. Emotions can influence investing decisions. A checklist introduces consistency. Ask AI to build a repeatable checklist covering areas such as, do I understand how the company makes money? Have I read its latest official filings? Is revenue growing? Are profits and cash flow improving? How much debt does the company have? What are its biggest competitive risks? Is the valuation based on realistic assumptions? What could cause me to lose money? Am I investing because of research or social media hype? Does this investment fit my time horizon and risk tolerance? You can save this checklist and use it for every company. AI can also help you create a research journal containing your original investment thesis, the verified facts supporting it, the risks, the conditions under which you would reconsider, questions to revisit after the next earnings report. This creates discipline and helps you separate evidence from emotion. The 5 biggest AI. Investing mistakes. Mistake 1. Asking AI for guaranteed winners. No AI tool can reliably guarantee which investment will rise. Market prices are affected by business results, interest rates, regulation, competition, investor psychology, and unexpected events. Anyone promising high returns with little or no risk should be treated cautiously. Investor.gov identifies such promises as a classic warning sign of investment fraud. V.E.R.I.F.Y. Mistake 2. Trusting citations without opening them. AI-generated links, reports, or quotations may be inaccurate. Open every important source. Confirm that the page exists, the document is genuine, the date is current, the number appears in the source actually supports the conclusion. Mistake 3. Using outdated market information. Company prices, earnings, forecasts, and economic conditions change. Always ask, what date is this information from? Then verify it through a current and reputable source. Chaz. Mistake 4. Sharing sensitive financial information. Do not paste confidential information into an AI tool without understanding its privacy controls. Avoid sharing. Account passwords. Brokerage login details. Complete bank statements. Tax identification numbers. Card details. Private client information. Other information that could expose your identity or finances. Use anonymized figures when possible. Manhatsa. Mistake 5. Following AI investment groups or secret algorithms. Be cautious of social media groups claiming that an AI system, trading bot, or secret algorithm can produce guaranteed returns. The SEC and other regulators have warned that scammers use AI claims, fake trading platforms, group chats, and supposedly AI-generated tips to gain investors' trust. A sophisticated-looking dashboard does not prove that an investment platform is legitimate. The V.E.R.I.F.Y safety framework. Before acting on AI-generated investment research, use the word verify. V. Verify the source. Use official company filings, regulator databases, and recognized financial sources. E. Examine the date. Check whether the data relates to the latest quarter or financial year. R. Recalculate important numbers. Check ratios, percentages, and growth calculations independently. I. Identify missing information. Ask what the AI may have overlooked. F. Find the opposing argument. Actively search for reasons the investment may fail. Why? You make the final decision. AI does not know your complete financial goals, obligations, risk tolerance, or emotional behavior. The final decision must remain with you, and major decisions may require guidance from a properly qualified financial professional. Safe, copy and paste, research prompt. Here is a complete prompt you can use. You are assisting me with educational investment research. You are not my financial advisor, and you must not tell me to buy, sell, or hold an investment. Analyze the company using only the reliable sources I provide. Separate your response into tabilan, verified facts. 2. Interpretations. 3. Missing information. 4. Major risks. 5. Arguments supporting the investment thesis. 6. Arguments against the investment thesis. 7. Questions I must independently investigate. For every factual claim, identify its source and reporting date. Do not invent financial figures, citations, quotations, or forecasts. When information is unavailable, clearly say, "Not verified." Finish with a checklist of facts I should confirm before making any decision. This prompt does not eliminate every AI error, but it encourages a much safer research process. Final takeaway: AI can make investing research faster. It can explain difficult reports, organize information, compare companies, challenge assumptions, and help you develop better questions. But faster research is not automatically better research. The safest approach is AI generates the questions. Reliable sources provide the evidence. You make the decision. Never invest solely because an AI tool, influencer, group chat, or automated platform told you to. Verify the information. Understand the risks. Protect your personal data. And never confuse a confident answer with a correct answer. If this video helped you understand how to use AI more responsibly, subscribe to the official AI Hustle Club. We explore practical ways Ordinary people can use AI for productivity, learning, content creation, and smarter financial research. Comment below. Would you trust AI to analyze a company, or do you still prefer doing everything manually? We will see you in the next video.